Hello friends, I welcome you all to today's episode on Broker Qualified Person. In our previous episode, we have seen regarding various institutions associated with the insurance business in our country. Today we will see regarding various regulatory aspects, important regulatory aspects, how IRDAI regulates this insurance intermediary, especially broking companies. Now, before we go to various regulatory aspects, we have to understand where does this IRDAI getting its powers to regulate insurance intermediaries. It gets its powers based on Insurance Act 1938 and the Insurance Regulatory and Development Authority Act of 1999. Based on these two acts, IRDAI gets its powers to regulate insurance broking business regarding its licensing, registration, and issuing guidelines regarding various operational aspects. And it also has powers to seek all the information regarding its business data, and it has powers to issue code of conduct and ensure that the broking companies comply with the code of conduct issued by them, and specify qualifications for the people soliciting business and various other aspects. And in the interest of, policyholder interest is central to the regulatory mission. So in the interest of policyholders, IRDAI can issue any guideline it deems fit regulating the business of these insurance broking companies. Now this, it's very important also to understand how the important the manning aspect of this broking company is regulated by the IRDAI. It specifies that all the people who are providing insurance advisory and soliciting insurance business should pass the specified qualification, specified examination after undergoing mandatory training, 50 hours mandatory training, and obtain broking license as broker qualified person. That is mandatory. All the people who are employed in soliciting insurance business are required to pass this examination. Now, other than this, it also specifies certain key management persons like Chief Executive Officer, Principal Officer, Chief Marketing Officer, Chief Finance Officer, and Chief of IT Information Technology, and Head Reinsurance, and Compliance Officer. All these people are considered as key management personnel under the regulation, and all the key management personnel are required to meet the fit and proper requirements as mentioned by the regulator in the regulations. Basically, we have to understand what are the different types of entities that can apply for registration with IRDAI. The various entities are any company registered under the Companies Act, any cooperative society, registered cooperative society that is, and any limited liability partnership registered under the Limited Liability Partnership Act. These three types of entities can apply as broking companies with IRDAI. Another important thing to know here is any entity applying for insurance broking license will have to carry the word broking in the name of the company. Without the word broking, the regulator will not issue registration for doing insurance broking business. That is another important thing. So now what are the different types of categories of insurance broking companies that IRDAI will give license? There are different categories. There are basically three categories. The first category is direct broker. The second category is reinsurance broker. The third category is composite broker. And within direct broker, you have other classifications, like a company may choose to do only life insurance business, so they can take only direct broker life license. A company may choose to do only general insurance, then they can go for license as general insurance broker. And a company may choose to do both life and general, so they can go as a direct broker life and general. these three categories in direct broker. And of course, reinsurance broker is only reinsurance. They can do only reinsurance. Whereas a composite broker can do all life, general and reinsurance. That is the highest form of broking. Another important aspect regarding this broking company registration is the validity of the registration with the regulator. This registration is currently valid for 3 years, and the company is required to renew the registration at the end of 3 years. There is a proposal presently with the regulator to make this registration perpetual till it is otherwise suspended or cancelled, so that they don't have to renew at the end of every 3 years. It's only at the stage of proposal, but as on date, the requirement is that at the end of every 3 years, the broking company has to renew its registration. Now, other aspect of this broking company is what is the capital requirement as mandated by the regulator. The capital requirement for a direct broker is 75 lakhs. The 75 lakhs, it is important that it should be own funds of the promoter, not debt. It is also very important. And for reinsurance broker, the capital requirement is 4 crores. And for composite broker, the capital requirement is 5 crores. And for reinsurance broker and composite broker also, the same regulation applies as to that the capital should be own funds, not borrowed funds. That's very important. And while running this broking business, there is another important aspect that is required to be taken care of, that is its net worth. The net worth of the broking company should be, for direct broker, it should be 50 lakhs. And net worth means, in very, very simple terms, you can say the difference between assets and liabilities. In simple terms, that should be 50 lakhs positive, the net worth for direct broker. But whereas reinsurance and composite brokers, it should be 50% of the capital employed. That is the minimum requirement. Or if it is 4 crores for reinsurance broker, it will be minimum 2 crores should be the net worth. For composite broker, if it is 5 crores is the minimum capital employed, it should be 2.5 crores. The next important regulatory point for broking company is professional indemnity. Every broking company, insurance broking company, is required to have a professional indemnity policy. What is this professional indemnity? Let us see. Basically, a broking company is in the business of providing insurance advisory to clients. When advisory is given, sometimes there may be a possibility of a loss to the client in various forms because of the advisory. It may not be intended, but sometimes it may happen, and it may lead to legal liability of the broking company. So, to cover such legal liability, the broking company is required to have a professional indemnity policy as part of the regulation. And this professional indemnity amount is basically 2 times the income of the broking company in the previous financial year, at the end of March of the previous year. That is 2 times. Or 1 crore minimum, maximum of 50 crores. So this is the requirement of professional indemnity policy. In case of reinsurance companies, the same 2 times the income of the previous financial year applies, but the minimum requirement is 4 crores and maximum requirement is 75 crores. And in case of composite brokers, the same 2 times the income of the previous financial year applies, and the minimum requirement is 5 crores, maximum requirement is 100 crores. So it's very important this professional indemnity policy is properly maintained on a continuous basis, and whenever the requirement of sum assured is increased, a proper retroactive dates are maintained, and if this is not maintained, the regulator will take a very serious view of the lapse. Another important aspect regarding this professional indemnity policy is the ratio of AOA and AOY. AOA is basically any one accident, AOY is any 1 year. Okay, and this ratio should be maintained 1:1. This is also very important. Earlier it was not specified, now it is clearly specified in the regulation. Now, it is also important to note what kind of business activities the broking company can undertake, because it is being a regulated entity, we should know what is permitted. To begin with, it's very important to understand that the regulation does not allow a insurance broking company to do any business other than insurance solicitation and insurance distribution. It cannot indulge in any other activity. But then originally it was allowed only to do insurance solicitation and distribution, but subsequently they have expanded to other insurance related activities like risk management. The broking company can provide to various corporates risk management services like risk assessment, risk improvement, and risk inspection services. When they employ a qualified risk engineer, they can undertake all these activities. And the broking company is also allowed to do claims consulting other than insurance solicitation. This claim consulting has got again two aspects. For the policyholders to who this broking company has sold insurance policies, they have to anyway provide claim consulting services as part of the policy distribution, because they have been paid remuneration for distributing this policy, and it is also required that the broking company should provide post-sale service. This claim consulting comes as post-sale service for the policyholder. So that they have to anyway do. But now the regulator allows the broking company to do claim consulting to other policyholders where they have not distributed. Okay, that there also it is allowed, provided up to 10 crores they can 10 crores claim, they can directly do the claim consulting. If the claim is expected to go beyond 10 crores, they have to take prior approval from the regulator to do claim consulting for the policies which they have not sold. And another very important aspect of this is they cannot charge fees to the policyholder in terms of percentage of claim. Say the expected claim is 10 crores. They cannot charge the client as 5% of the claim, 10% of the claim, like this. They cannot charge as percentage of the claim. They have to negotiate a fixed consulting fee with the client and then enter into an agreement to provide claim consulting service with that fixed fee as the remuneration. Another important aspect of insurance broking business is co-broking. In this co-broking, the regulator permits 2 or more registered brokers to provide insurance advisory to a client with the written consent of the client. This is basically permitted to take advantage of specialization of various brokers to handle the client's requirements, because one particular broker may not have all the knowledge and specialists and specialization. So 2 brokers can join their knowledge resources and provide advisory to a client, of course with the written consent of the client. And one important feature of this co-broking is it is permitted only for corporate clients, not for individual and retail lines of business. Co-broking is not permitted, only for corporate clients where the expertise and knowledge requirements are high and varied. So the requirement of co-broking sometimes comes, but basically it is allowed only when the client gives his written consent for co-broking. One important feature of this regulation is regarding the ceiling on business from single client. A single client cannot give a business more than 50% for the broking company. That is, in a year, if the total premium is say 10 crores and the broking company cannot source 5 crores from a single, the maximum is 5 crores, 50%. More than 50%, it cannot go more than 5 crores from a single client. This is to discourage starting of broking companies for serving a single client. So to avoid that situation, this particular regulation has been incorporated. That is, the broking company needs to have number of clients. That penetration and distribution should be wide. So if one client is permitted to give business to the broking company, then the purpose of the regulator to spread the insurance far and wide, increasing the insurance penetration will not be served. So for that purpose, this particular ceiling on business from a single client has been incorporated. Among the key management persons, we have seen one particular designation, complaince officer. This complaince officer is appointed by the broking company to take responsibility for internal controls and systems. All the business systems, internal systems and control. So this complaince officer is responsible. But this complaince officer appointment is mandatory only when the broker remuneration in a financial year goes beyond 5 crores. When the remuneration earned by the broker during a financial year is below 5 crores, he need not formally appoint a complaince officer, but somebody can take care of internal systems. The idea of appointing complaince officer means the person should meet the fit and proper requirements as mandated by the regulation. Lastly, we have to see regarding the principal officer. We have seen in the key management personnel the designation principal officer, and as far as insurance broking companies regulation is concerned, this principal officer's role is central to the regulation. IRDAI regulation, it specifies what is the required qualification, what is the required training and examination. All those things are specified by the regulation. And for this particular designation, the broking company has to take prior approval of the candidate for appointment as the principal officer. The regulator has to give clearance for appointment of the principal officer. Also, when the principal officer resigns from the company, his separation also is to be approved by the regulator. So it is very central to the whole regulation process. From the perspective of regulator, the principal officer is totally responsible for all the operational aspects of the broking company. He is alone responsible to the regulator for answering any queries raised by the regulator regarding the operations of the broking company. This principal officer can carry the designation of chief executive officer, a director or managing director, but from the regulation perspective, he is responsible, whatever designation he carries, he is responsible for the complete operations of the broking company. Any lapses, he is accountable to the regulator. Friends, in this episode we have seen various aspects of regulation pertaining to insurance broking companies.